Okay, hey everybody, this is Brett from Moonstream Crypto. Been away for a while. I just wanted to update everybody on the current state of the markets. So let's go ahead and dive in. But today we're going to cover the total market cap. We're going to look at Bitcoin. Going to talk about some very interesting studies that I have that point toward a much deeper downside, but there are still some bullish tailwinds behind us. So with that, let's go ahead and dive in. In this chart, we have the total market cap, and this bear flag that we've been watching for many months now, since December, has just played out at least on Bitcoin, which was giving a target of around 74K. We'll get to that in a minute, and I'll come back to that. Just wanted to touch on Solana here, which has lost its $125 support range that we were buying all the way through last year. And essentially, I doubled my Solana holdings by buying in that green buy zone, buy low, selling high. So with that losing, we had a support area right around 100. So I've been buying a little bit of Solana here at 95, but it could easily go down to this $80 range. I do expect some kind of a bounce with the overall market, which is a bit oversold here. And won't get into the spaghetti and the lines and all that, but let's see on this chart here. So total market cap, it's really important. The $3 trillion level is so important, and most people don't realize that the top of the last cycle was not related to the price of Bitcoin at all. It was when the total market cap hit $3 trillion, and we can see that by zooming out all the way here. And similarly, in this latest market top, when it hit $4 trillion, had a bit of a throw over, but that's why I was selling my Bitcoin at 124,000 and bought a little bit at 100,000 for a bounce. Got stopped out on that, but I've been out of Bitcoin since this further ride down. Question is, what happens next? I do tend to use the total market cap rather, to gauge where things are likely headed. And so what I think is possible is a deeper drop here, and we could go down to this $1.78 trillion level, and that would coincide. It's about 40% below where we were up in this bear flag. And I'll show you why when we look at the Bitcoin 5-day Gaussian channel. Points to some deeper lows. I'm going to temper that a little bit. We'll talk about that, why that is in a minute. But here we can see this bear flag potentially pointing down to this range. I had originally drawn a smaller bear flag on Bitcoin with this as the flagpole. This is a bit extended out. I don't know. It could go either way. As a flagpole, that's we've had enough ups and downs that may or may not qualify. We'll have to see how it plays out. Maybe it's here, and in which case we have a little bit deeper on there, but not as deep. So we could see that coming down to these levels, but it's hard to know in this case. So we'll see that plays out, but I think these targets will get a bit of a bounce here. We see money flow here, probably shorts covering in this 2.43 trillion area. Either way, 3 trillion is going to act as some resistance here going into the future, I believe. And if we just extend that out, but getting a bit of a recovery bounce into the 21 and 50-day moving averages, exponential moving averages going lower. So we'll see what happens there. One thing that's interesting too, though, nobody else that I know of has been following the IBIT as I have ever since inception. If we go out to the weekly, actually don't do that. It's going to make your eyeballs hurt. But each one of these gaps, much like the CME gap, I was watching the IBIT all the way back when it was first coming out in 2024, caught a cup and handle breakout there, and that was great. So started noticing that on each one of the gaps, similar to the CME gap, these were starting to backfill every time, right up until I said these are working 100% of the time, and then they stopped for a while. But at any rate, pay attention to this because we've just now filled on the 4-hour IBIT rather, and somehow that got bejiggered here. Let me just recenter that. Basically, all of these circles on the 4-hour IBIT, as I mentioned, had been filling, and there was an open one though that just filled today and creating some upside gaps. So at some point I expect the IBIT and Bitcoin obviously to push up to these higher levels and fill these. Maybe this one fills first and heads lower. This one over near the top is going to be a little bit longer out, I believe. But just to show you that here, all of these in orange have already filled, and the one that just filled now is this one right here. There was a gap in November of 2024 where we gapped up, and of course that was the election gap. So with that now being full, I have filled. The red ones have been unfilled, so I'm just going to take that one off, and because I am actually monitoring this. Very interesting, right? So if you follow CME gaps, And we know we have a CME gap a bit above here, but this was a pretty big one that hadn't filled yet. Have a couple smaller ones still unfilled down at the 38 and 36 level on the IBIT, and one all the way down around 30. So these do act as magnets to price. This is not one we want to fill because that would equate to a much lower price on Bitcoin, but we have to be open to any of those things, and the timing of them, it can be several years on these. And so anyway, that's all I wanted to show you there. But in the near term, probably magnetized towards some kind of a recovery gap on the IBIT and the CME. All right, here's a study I was updating earlier today in my M3 Active Trader class. You guys, if you're not familiar yet, we have a class where I update every day in Signal. I do a weekly class every Wednesday, and we cover all of these things. So if you like what you're seeing now, please like the button down below and comment and share if you would, and subscribe, because we'll be doing more of these. And this is very timely information. If you'd like more frequent updates, check out moonstream.io/M3 for M3 Trader. And there's more there. You can read about that. But back to this. So what I started this study as how many days between the market peaks and then also from all-time high to all-time high. So in purple, we have from breakout, new all-time high here back in 2013 to all-time high here in 2017 was about 1,492 days, right? So that was 49 bars. We can see that. The next one a little shorter, right? So the breakout here to the one in November 2020, that was 43 months, 43 bars, 1,300 days. And then it extended a little bit in between, 47 bars from 2020 to the breakout here of the all-time high. This is just the breakouts on 1,430 days. And so that kind of projects out potentially the next all-time high breakout into June of 28. But I want to call our attention to specifically from the green boxes where all-time high to the new all-time high, right? So we could draw this a little taller, just pointing that out. 49 bars, 47 bars for the cycle in between, 47 bars for this cycle. I had both of them drawn on here, wondering if October would be the high, and it was right in line with the last cycle, 1,400 days, 47 bars, 47 bars, 1,430 days, one extra day in the last cycle, give or take. This is a monthly chart. Okay, so with that in mind, what I was just drawing in class today is if we just want to see from the all-time high to the low of the market, is there anything we can gauge from there? And so this was 21 months in that early cycle of 2014. But what's interesting here is the last two cycles, exactly 13 months. From all-time high here in December of 2017, of course, who can forget that, to the market bottom here in January of 19. So that's 13 months, 396 days. Same thing here in the 2021, from November of 2021, when I first started saying get into cash and out of the markets, all the way down to December of 2022. And of course, we nailed this re-entry on this bar right there with our early reversal indicator. I wasn't going to talk about that. I don't even have it loaded here. But since we're here, I wanted to show you, because our signals that we've developed, this being an accidental discovery, have been amazing. I just have to merge all the scales to the right, because this is only triggered 4 times, this bullish early reversal indicator. It caught it right there. We were getting back in the markets. Prior to that, this is back testing, as we didn't discover this. I didn't discover this until 2022, 2021 cycle. But you can see this has been very accurate on that monthly time frame. So I'll leave that on there because that's very interesting. And on the next time it fires, we'll be going all in. I am confident enough in that it's catching institutional programmatic buying and selling, because it takes a lot of momentum and volume and velocity to trigger this indicator. It was an accidental discovery, you guys, and those are often the best kind. So back to what I was suggesting, though, is if we, following along from the high to the low of the cycle, and being 13 months or 13 bars in each of the prior cycles, if we overlay that here, with October being the all-time high. Now, somehow I got that shifted here. It was actually October here as well, give or take. We kind of pushed a little bit higher there. Well, no, with the wick we did get around the same point. So let me remove that over a little bit, and that should be here. So that extends it out a little bit. If that were to play out again, 13 months, 400 days, puts us over here to a bear market low of, that would be November of 2026. So let me just double check that because yeah, this candle, the high there was that 126. That was where we was on October of 2025. So like that'll be, let's just say into September, October, November could be the low. I think probably that comes sooner, and then we could see another start a strong push higher end of 2026 in, because we know October is usually a great month and September not so much. So we'll kind of leave that open, but interesting to have a bit of a roadmap there and to keep that in front of us. So we'll be revisiting that. Here's the Gaussian channel, the 5-day Gaussian channel, however you want to say that, potato, potato. But this would indicate that we could go down to 46,000 or even down to 60% below the Gaussian channel when it breaks, which we've seen in the prior cycles, all the way down to 37K. Now, I don't think that's the case, and I'll just say up front, because we didn't have a parabolic move higher like we've seen in these other cycles. But we want to keep an eye on this, and just looking back, you might say, well, that's a pointless study. But regardless, and we'll take out 2012. It didn't really count back then, too early. But here in 2015, we had below the Gaussian channel, kind of consolidated a little bit. But once it got below the channel and it turned red, that was a 60% drop to the lows right in here. Okay. There's, doesn't mean anything. Only one correlative event. But again, in the next cycle, it went from the break. Once it turned red from the break below, that was 50%. So that wasn't quite as bad. And this was after that parabolic run up here. And that's partly why I don't think we're going to go as low, because we haven't seen that parabolic rise yet. We saw a smaller parabolic rise this time, and still, but Gaussian channel, once it went red and broke down below that, we had again a 60% drop down to that 16,500 level, right around that range, which I had forecast back here in May. It's another story, but anyway. So now here we are again. We're at the Gaussian channel. We've turned red. We were consolidating, starting to head down lower, and so far have headed down already 20%. So, the point being, since we didn't have the parabolic push higher, and which would have caused the Gaussian channel to be higher, then maybe this is only going to go down 40%. We're just speculating. But and maybe it could hold here at 25%, but probably not. And we have to be open to the fact it could go 50%, it could go 60%. And so we'll have to wait and see. Either way, it does look like it's accelerating and heading lower. The big question is, do we hold here at 74K, 75K, which would be the price of Bitcoin once, and many people don't know this, but allegedly, Bitcoin has never gone below the price of a new incoming president. So back in November 5th, of course, we had the break above prior resistance right in here at 73,000, more of a range, 73,000 to 75,000, 73 to 74,000. So if we call it 74K, then the price shouldn't go below here. And that's what we're currently testing on the 5-day. And so we'll see what happens. If that can recover, we'll get a bit of a relief rally. But I still think we're in trouble. I think we're still in trouble here because this is kind of like quicksand. So if we keep on going a little further, I want to talk about tether dominance. Money's flowing back into stable coins. This is another bearish signal. And by the way, you can find, I cover these studies and update regularly on TradingView. So you can Google my name, Brett Fogel, at TradingView, and you'll see this study. I've been doing this for about 6 to 8 months now. And essentially what this is, if you haven't seen it before, this is tether dominance. It runs inversely to crypto. And I had seen somebody do a study on this, so I recreated it and made it better in my, allegedly, but I think so. So since 2018, the lower range of this trend line, when the tether dominance has come back down to that, that's generally when money's flowing out of Tether into crypto. Those are when we see those market highs. So we see this back in the summer of 2021. Before we have that July crash, right? We were doing pretty well. And then money flowed out of Bitcoin and crypto into stables right in this range into July. And then it reverted and we rallied into the highs. Money flowed out of stables because, when people sell crypto, they don't usually put it back in their bank account. It's going into stable coins. And so this is a good surrogate inverse relationship. The yellow line is kind of the median or the mean. And we can see that with support, some resistance in there. So, and the blue bars here, I've copied from the last cycle to this one to give us a roadmap of what could happen. And we're starting to see that play out. So originally, I was wondering if it would be like that, but I was hoping we could extend it out a little further, which we have. So it's looking more like this. And I've labeled this as the crypto crash zone, the crypto correction, and into bear market zone. Now, we have gone past crypto correction. This level here, 6.21%, this had resisted a few times before. That was a danger zone. And let me just move this out of the way. But we can see now that the stablecoin dominance, Tether dominance, breaking above that 6.5%, now will likely act as support. Now it's pushing up clearly into the crypto crash zone and the 7.5%. So my fear is we break above, maybe pull back a little bit, but we might be headed straight into a bear market just based on this. Doesn't mean it plays out exactly the same. Some people say that, these things are the crayons of TA, but, it's useful to have a fractal just to go by. And certainly, once we get into 7.5% stablecoin dominance or Tether dominance, we're in a corrective zone. We can see that. Money flowing out of crypto, out of total market cap, and into stablecoins. So that's another bearish sign. I do think, we could probably pull back a little bit here, but near-term bearish. I think if we do get a short-term bounce on all of this, we'll be selling into that. Now, here's a head and shoulders study, and many people are catching on to this. I've been talking about this for a couple months now. And this is one of the same patterns I used to call the top in the last cycle. And if we were to go back that far, there was also, it's hard to see on the monthly time frame, but there was a little head and shoulders in there, and sure enough, that went lower. The thing is, though, how about this? We don't really have a right shoulder. And the head and shoulders measured move, prior to this, the neckline was more like that. And I was expecting a bounce to put in the right shoulder. Now, we didn't get that. So it could be we get a bounce from here to put in the right shoulder, at which case the measured move would be from here to here. And I've moved that over. That would be potentially that 44,000. So we're kind of in that zone of, if we lose 75K, 74K, then we could easily come down into this 45K region. I don't really feel that that's likely, and it would probably take a while if we got a right shoulder. But if we don't get a right shoulder, then we wouldn't get that deeper measured move. And hopefully we could hold. I mean, opium's not a strategy, but to keep the market structure back since December of 2018, bottom here, bottom there, the last cycle, and caught the COVID crash. Can't really count that, and then up to this. So this trend line here is really important. We could try it either one of these. So we have 62K, and now that was the prior target when I had a head and shoulders with the rising neckline. I won't recreate that. But I think I really would like to see 74K hold, but it doesn't seem very likely. These are all scenarios we have to keep in mind. If we do get a bounce from here, and here's the thing, we've had we're working on 5 red months, which is rare. Usually 4 months is the extent of it before we get a green candle. And so if we do start to build a right shoulder, then the head and shoulders is back on the table. If we were to continue pulling back here, then we could hold that and rally out of that strongly. And that would actually be better because the head and shoulders target puts us lower. So these are kind of things we're paying attention to. For those of you that don't know, Coinbase now has Bitcoin futures, and if you're tired of getting liquidated and stopped out on your spots or your leverage margin trading, and which very much happens. They do obviously hunt for liquidity, and stop loss hunting. So on Bitcoin futures now, this is something they've just partnered. TradingView is not a commercial for them, but they've just integrated with a broker called Ironbeam, and you can integrate with that. Ironbeam has futures and options on Bitcoin futures. Why do I mention this? One of the things we've been playing around with is we have some software that will, using technology, say when to buy a various call and put spreads. This was caught a good one here in December, and that would have been a profitable call spread all up to about there. Then we had a put spread over here where you could have bought put spreads. Essentially, by buying the spread, you lower your overall cost. You can also buy naked. I've been in a Bitcoin futures short in here last couple days, and Actually, that option expired. I should have rolled it over, obviously. But you can now do that integrated through Iron Beam right into their order books. Okay, so it might be something to look into. Not a commercial for that, nothing to promote. Okay, so what else did I want to show you? By the way, if you wanted to find out more about how we're doing that with exploring new crypto options, I'm not here to promote Iron Beam, but we have a new course that we're halfway through. It's not open yet, but you can watch the replay on this, and it's in beta, unveiling the future of trading. I think this is the future of swing trading using options and option spreads. You can go watch that if you want to go over to moonstream.io. And let me get the short link for you guys. I meant to do that. The moonstream.io and / options replay. So there you go. Here's the options replay. And you can learn more about that. Go check it out. If you wanted to enroll in the next one, it's options moonstream.io / scalper. And we have some beta pricing there. But this class, you can still join it. But I didn't really want to talk about it that much because we're figuring all this stuff out right now. And the other option brokerage that we like is in the course. It's real simple UI. All right, well, back to our regularly scheduled programming. So going back to over here, I want to share a couple things. Before we do that, though, I did want to share a little bit in news. So 4 reasons why 75K may mark Bitcoin's 2026 price floor. As I was saying, guys, I've been saying 74K would be the next bottom. I've been saying that for about 6 months now, publicly, but thinking we would have hit 200K by now also. So we can't win all of them. Can't win them all. All right, so basically Bitcoin fell to 74, just below 75K after futures market liquidations, and yet derivative side, no signs of slowing or panic or extreme bearishness. I guess what I'm watching for is a capitulation. And maybe we get one today, and if it recovers 75 and we have a wick down, that's still all right. And so I think we got down to around 72K. Check my other monitor over here, which has gone into sleep mode. But here it says, traders fear that further downside for Bitcoin remains possible as gold has been selected as a clear store of value. Yeah, I mean, that's the thing. Gold and silver are rallying again. And so looks like that money is coming back out of crypto. I'm just looking on my chart over here. Looks like we got down around $72,000 Bitcoin right in a buy block, however. And I'll pull up that chart when we hop back over. So anyway, with that, I'm not going to get into the weeds here with treasury yields and get too far into the macro, but derivatives showing resilience despite a 40% price drop. What does that mean? Probably means people are buying futures and call options. But keep in mind, after 10/10, after October 10th, a lot of liquidity is gone. There's $19 billion that evaporated. And so, some people are saying a floor has been put in. It's not really clear, but I think we're not seeing these rip-roaring bounces and rallies because that liquidity has just been vaporized. So it's going to be a while to come back, and we'll have to see what happens. ETFs have been selling out of Bitcoin, ETH, and Solana. So that's a lot of this. Of course, Michael Saylor's still buying, as he does. And by the way, all of the FUD out there about Michael Saylor getting liquidated, that's total BS. It's ridiculous. So a lot of their Bitcoin, the early Bitcoin they bought at lower interest debt from last cycle when interest rates were low. And since then, they've been buying by their offerings, the Strike, Strife, and all these offerings that they are pushing out and selling on the MicroStrategy derivatives. So just all of this, that if it goes to 65K, he's going to have to sell it all. It's just, don't believe any of that. That's not true. If you're ever in doubt, just go put it in Perplexity AI or Grok or something, and it'll tell you the truth, because there's a lot of FUD out there as usual. Okay, so that's all I wanted to cover on that. One more article. Bitcoin bounces to 76K. On-chain data, technical signal deeper downside. I don't use on-chain metrics anymore. It is not actionable and meaningful in the near term. As swing traders, which is what we do here in M3 Active Trader, I want to catch the swings from low to high, and on-chain metrics are not reliable. Case in point, I was in a whale session at Bitcoin 2021 in a room full of whales, a $15,000 ticket. I didn't pay that much, but I was in there with everyone else who did. And the editor of Bitcoin Magazine, Dylan LeClaire, spent a whole hour on on on-chain metrics on why Bitcoin would not go below 30,000. And at the end, I raised my hand. I said, well, what would you say to people like me who thinks it was going to go below 20? And he sort of condescendingly said, well, I showed you guys all why that's not happening. And all the whales turned and looked at me like, who let that guy in there? But I was right, and I had publicly forecast 16.5 as the future low, and actually got a little lucky and nailed that. So I wish a lot of those guys probably wish they listened to me, but it's not about me. It's the point is the on-chain metrics are not reliable for pricing and direction and timing. Timing maybe, or direction maybe, but not timing. So Bitcoin's chart signals sub 60,000. So they are jumping on the bandwagon. I had this exact chart up until last week, a couple days ago. But the thing is, we've now broken this. This is not a right shoulder. And that's a weekly chart. So you had a little bit of a weak shoulder, but really not really. That's not really a shoulder. You know, if we got a monthly bounce, I would say that could be a shoulder. But this was my target too, 62K, based on the rising neckline. But largely that's been invalidated, you know, and this isn't a right shoulder. So I think they need to I think they're wrong on that. At any rate, people saying Bitcoin will drop to 40,000. Anytime you have one of these pseudonymous experts that you've never heard of saying this will happen, chances are that's not going to happen. You know, and I never am dogmatic about saying this will happen. Always the student, never the master. But a lot of these guys want to get attention and saying this is going to happen next. And invariably, if you have that much arrogance, then you will be proven wrong. It could happen, but anyway, this was from somebody, crypto analyst Bitcoin Habibi. That's funny. Now this guy's pretty good. Actually, Merlin the trader. I pay more attention to him, but he's also got it wrong. I think. Well, we'll see. The bear flag on Bitcoin I had drawn from here to there with a target right in the $75 range. Only because while technically the flagpole should be from the last swing high, when it's you know, this is sort of a rounded one. It's not as steep as you would say, and I would say this velocity has more merit as a flagpole. This is kind of maybe a head and shoulders pattern there. I don't know. We'll see who's right. It's not about being right. It's about being on the right side of the trade. But with this breakdown, and some people use the bear flags breakout from there, some people from here. At any rate, I think he's massaged it a bit to where he thinks it's going to go. 65K, we'll see. Certainly possible. Bitcoin metrics indicate continuation of the bearish trend, and talking about the Puel multiple, which has to do with miners, and which tracks miners' daily revenue. I thought it said revenge against the annual average. So the problem with that is the miners, there are some miners that have such cheap energy cost, they can profitably mine in the $15,000 Bitcoin range. Nation states, maybe they've plugged into a windmill, a volcano, or a river with natural energy generation, whereas most of the miners with ASIC rigs, where they're plugging it into the grid, have much higher mining costs. So this could be fueled by, if it goes any lower, it could be fueled by, I'm going to pull up another graphic here, by the miners having to sell because if Bitcoin goes below their cost. So here's Bitcoin. Now here's a fun fact. Bitcoin has never fallen below its electrical cost, and that right now is 71,000. So we came right down to that. Let me just see here. The low of today, right around 72,000. So the miners are protecting that floor, but it doesn't mean it's gonna hold. And this is right out of our M3 Active Trader chat, by the way. If you guys wanted to join a great group of traders, not a Discord with thousands of comments. It's probably 20, 25 comments from smart traders here, and the replay of my weekly live class here. And yeah, so also saying 70K must be defended. I haven't looked at this yet. This is from a buddy of mine who's an old Bitcoin miner himself. And what is this? Some kind of Elliott wave. There's a Fibonacci 50% retracement. It could easily come down to the 618 at 1695 and still probably bounce out of it. But at any rate, the hash ribbon, which is also a mining signal, I think the hash ribbon's broken. Has anyone pulled that up lately? Because usually it'll create a blue dot when the miners are buying again, but for many weeks and months it's just maybe it's a data glitch going sideways, so can't use that or rely on that anymore. But here, if price continues to decline, this effect intensifies, increasing pressure to sell the miners' reserves. See, the Bitcoin miners, they mine Bitcoin like you might mine gold, and you probably have some in reserves, right? So what's happening right now as price is going up but dropping, miner reserves in blue has been consistently dropping since January of 2024 and is getting at record lows. So, they need to kind of defend the price, start buying and, I'd say mining more, but they can't with the halving. Whereas they were mining and selling 12 billion of Bitcoin a year, that's been cut in half with the last halving. So there's a lot of factors at play here, obviously, and a lot of fear in the markets. I have to acknowledge that with tensions rising in the Gulf, the Middle East, of course, and allegations that China, Xi Jinping, had a failed coup attempt. Look, competition for resources is increasing. Desperate times, desperate measures, volatility and uncertainty spook the markets. So I think we're probably going to see these markets bleed out here as for the next 4 or 6 months, as we looked at before. Also, large Bitcoin inflows to Binance raise the alarm. Typically, large inflows of crypto to an exchange indicate and signal selling pressure is on the way. Historically, similar inflow peaks such as the one in November have been followed by sharp downward moves in price, and the surge suggested that holders are actively preparing to de-risk. And I hear 15,700 Bitcoin were added to Binance. That's a lot. I remember Willy Woo sold, I think it was Willy Woo sold 10,000 Bitcoin, and you do the math on that, at 100,000, that was $1 billion. And now it's going lower. I wonder what they knew that we didn't know. But when you see these early miners, keep in mind they've been holding, many of them, since 2011, 2012, and they don't want to ride all the way down another full bear market. So anyway, Bitcoin inflows trigger FUD as selling pressure builds on Binance, says crypto quant analyst. And so, it suggests we're entering a phase of capitulation and panic. That's kind of what we want for a bounce, but I'll be selling into any bounces. We recently released a whole course on privacy coins, and the privacy coins are seeing huge moves, 100%, 420%, even 10x, but all of that has cooled off now, because rising tide lifts all ships and a falling tide lowers all ships. So we'll be looking for a bottom and a bounce soon, and to sell into that bounce as a counter trend rally. Do not want to ride this all the way down. I would rather pay more for more certainty in the markets. All right, so what are we seeing? Solana, we talked about already, coming down in this $92 range. Probably, get a bit of a over bounce. It's holding 95. I had a buy limit order in at 95, so that filled. I would expect a bit of a bounce, but I'd be looking to sell anywhere in this $110, $115, $120 range, because we don't want to. It probably comes down to 80 before it's all over. And anyway, just to make take a walk through all of these, I did mention I'd show you this. And by the way, please, if you like these, I'll do more of these if you guys get the likes up or trying to grow the following. And no BS, just straight to the point charting for active swing traders. This is not for day trading. This is not for hodling. I think hodling can work, but swing trading in the middle of an upward channel to compound your hodl bags makes more sense. And so with that in mind, this is the chart showing an interesting trend line, resistance flipped as support-ish, held as support here, but these align right to where we are. And now we have visualized where the buyers are on the books in aggregate. Sometimes it's exchange related specific, but here we visualize the concentration of buyers, and the midpoint of this usually holds. So that's right at 70,000, 70,000, 71,000, where the miners need to defend. Right here at the top of the buy block at 72, 73,000. So we're seeing, I think we think we see a bit of a bounce, maybe up to around 81K, and then they dump it again, probably down to that 71K. And maybe we zigzag around and we can go higher from there. Maybe. But who knows? All right, guys, let's take a look at a few more things here. I won't go through all of these. Total market cap we looked at. The dollar index I think probably rejects here and heads lower. It's in a nice downward trending channel. I'm going to pull up another chart of this just to show you the zones, though. And I think that's worth doing. So let me go over here to the open, a new chart. Bear with me here because I'm sure I've got it favorited. And there we have DXY daily chart. Okay, so these are the different zones to pay attention to on that. And I probably opened two of them, so we'll close one and go with this one. All right, so here, this is the DXY on a weekly. Let me go to a daily chart. And we have the 3-year cycle lows. So we're pushing up a little bit. Came down pretty close to or broke the 3-year cycle lows. And I had put this news article out a while back. DXY is hanging on a 15-year support trend line. Here's what it looks like. So with that as an older trend line and not going below 103, well, we now have done that. Obviously, that was this line. We've recovered it. Well, we haven't recovered it really. It's trying to. But if it rejects here, and then we head down to the 4-year cycle low, DXY down, crypto up, ostensibly. But with the global reserve currency potentially in jeopardy, we don't know if that's going to happen or not. Let's see. So I think that's about all I wanted to cover there. And let's see, as far as total market cap, we talked about that, total 2, everything bled out. And now our sell blocks, our buy and sell blocks, look how strong these are, you guys. These are one of the indicators. If you go to cryptomastery.org, these are ours. They were created by a 15 or 25-year trader, quant engineer, programmer. These are the concentration of the aggregate sell orders on the total market cap excluding Bitcoin. Trying to use my mouth and mouse at the same time, and that's what happens. So midpoints of these. This is another reason I was selling Bitcoin up in here. Big sell pressure. Now, here's what's interesting. The reason that's such a tall and thick range for selling is because of October 10th. You know, and I think there's certain funds and exchanges probably got hurt pretty badly and have yet to implode. But they can't just put in sell limit orders in a narrow range. Why? There isn't enough liquidity out there to absorb it. So there's a much taller, this happened after October 10th. We didn't see these thick sell blocks, okay? So this means someone's trying to unload a lot of crypto up here, and they've had to widen their sell range to have any hope of offloading it. But this is huge sell pressure. It's going to have to clear, and so much so we're losing this symmetrical wedge pattern right there and headed lower. So not looking good on total 2 or total 3. Ethereum hasn't looked good to me in a long time, and we definitely have lower prices. All of this is invalidated. We're not going higher anytime soon. Might get a bounce, a counter trend bounce, but we're heading lower. On total 3, I'd say 680 billion. That would be potentially places to start dabbling, but I don't know. Be very careful. I'd rather buy into strength rather. Trying to get through this quickly, but I'm stumbling a little bit on trying to speak and show this. So you guys, everything's red today. Solana, many of these coins, including the privacy coins. We'll talk about that later. I did do a report on that. You can watch the previous video on the channel to learn more about that. But everything bleeding red. The one that's still looking good, that we did put a buy order on Hyperliquid recently. This is the same kind of a chart pattern that Zcash did a 10x on from. So long-term resistances and a downtrending trend line. Now Zcash's was over a longer period, but I am looking for these breakout retest resumption. Probably it goes at least to the golden pocket around $45, and then break a retest to support. But I think, Hyperliquid, definitely one to look at. It's a business that makes money. Imagine that. Customers, I hear, are good for business. Profits, I hear, are good for business. They are pushing back the profits back to the users, a large portion of it. So Hyperliquid, a great exchange, earning money, has real utility. And as these exchanges, like the centralized exchanges, are under the radar with regulators, less so than before, but the decentralized exchanges are exempt from that, and I think they will absorb a lot of the volume, and that means more people using, and you guessed it, more profit for the business, which attracts more investors and institutional investors. So Hyperliquid, one to keep on your radar. You can find it at hyperliquid.xyz. It's over on the Pith network. It's also, you can find it on, well, let's see, Binance US, I don't think we can even use, but it is on Kraken and various other international exchanges. So anyway, I didn't want to make this too long, you guys. Nothing else to see here. I would be watching very carefully at these levels, and I wouldn't be buying anything new right now. I'll wait for things to stabilize. And with that, again, please like the video. If you like this type of video, we'll do more and original studies that you won't find anywhere else. I say 100 times a year, show me the charts, I'll tell you the news. Guys, I've been noticing the hype cycle ramping up and saying for the last few months, this doesn't feel right. It feels like 2021 when I first came up with the hype cycle, because you remember everybody thought we were going to 100,000. All of the news articles and YouTubes were saying, oh yeah, 100,000, repeating and cutting up other interviews with their own slant to it. Keep in mind, all through here, the hype cycle was at its peak, and that was because the powers that be, the owners of exchanges, the owners of Cointelegraph, were likely dumping and providing liquidity. Just my opinion, but maybe I have some inside information that would lend itself toward that being a possibility. Okay. But at any rate, the hype cycle has been huge all the way through, people upping their estimates. Tom Lee and Kathy Wood, again, with egg on their faces from saying much higher prices. Show me the charts, I'll tell you the news. Right now, we are seeing on a weekly time frame losing that 75K important support. But in reality, look, I often see, and you won't hear this anywhere else, this large candle, some people call it a vector candle, some people call it a fair value gap. You can call it whatever you want. You can call it a slice of cheese. All I'll tell you is these are areas of imbalance, and most often they will retest the midpoint. It did retest here almost, but I think we are if nothing else, we're retesting the midpoint of that vector candle. And if we hold here and bounce, then market structure maintains. And I would also say we would push up to the midpoint of this candle. Vector candle, fair value gap. You can Google that stuff. I have GTS. Google that stuff. That's the PG-13 version. But anyway, you know what I was about to say. Very often, price will go up to retest the midpoint of that. So I do think we have a bounce, but I think, prior support becomes resistance. I'd be selling Bitcoin and crypto into the 80K, 82K bounce region. And so with that in mind, hopefully you like the video. Again, you guys can always find me over on TradingView. So just putting Brett Fogel and TradingView, some of the studies I covered today, the Gaussian channel, the tether dominance, the bear flag that we've been talking about for months, and the head and shoulders, and some other things. All right, so anyway, cheers everybody. Hope you have a great week. I'll try to do more of these. I was deathly ill for a month and have narrowly survived. So it's like Mark Twain said, the reports of my death have been greatly exaggerated. So that's good news. And if that's good news to you, go ahead and please like the video. It helps us get this to more people, and we'll do more of them. Okay, cheers everyone. Bye.